Module 1.7, your trading decision process. The learning outcomes from this particular unit are to firstly understand the key factors and processes involved from the idea to trade, through entry, and finally exit. The reason this is important to you is understanding this process is the first step in developing a trading system which is the right fit for you. If you understand the processes behind your decision making, then you're more likely to develop a system that you can follow and that you can subsequently measure to see how successful or otherwise it is. So let's look at why consider a trading process at all. Many new and even not so new traders don't fulfill their trading potential as they haven't fully defined their trading systems and processes. Often there's an almost complete focus on trade entry indicators, ignoring some of the key factors that can contribute to overall positive trading outcomes. You'll hear people talking about the idea of treating your trading as a business, and it's logical to do so. And if you are to succeed in this aim, then you need to make sure that you consider many factors and have a more complete system. And as previously stated, the first stage in creating a system is to do some learning and be clear on the process. So we've got a 3-stage trading process we want you to consider. The first stage is the pre-trade stage, and this includes things like, are you in the right state to trade, both emotionally and practically? Whether you've got an overview of the market or not, so what are the key indices doing, such as the S&P 500? What are the commodities doing, so the major ones like oil and precious metals, and of course the major FX pairs. If you have this overview, big picture of the market, then you're more likely to be able to trade the time frames of your choice for whichever particular session you're looking at the market. And this of course includes being aware of the timing of economic data that's due to be released and its potential sensitivity or impact on particular currency pairs that you have an interest in. So these are all the aspects you need to cover pre-trade. The second stage is trade entry itself. So look first at the daily view of the preferred pair that you're looking to trade. Observe those key price lines regarding sentiment, the support and resistance lines that we're going to talk about in more detail in Module 2. These are important. Confirm the time frame that you're going to trade. For some of you, you prefer the faster time frames. For others, you might prefer the longer time frames. You'll find your own groove with what works for you. And again, we're going to talk about that in detail at another point. Next thing you've got to decide is what's got to happen so it fits your entry system. So you've got a chart in front of you. If it's not currently an entry, what would have to change so it does fit some criteria that you wish to set in your particular entry system? Then, of course, it's not only about entry as I've already referenced, it's also about exit, and both in terms of managing a trade that goes against you, but also how you take profit. So we're going to look at things like a stop loss, and also alongside that, to keep the risk within your tolerable level, we're going to discuss something called position sizing, which simply is how much of a particular currency pair you should enter. And then keep asking the question, has it hit my entry criteria that you decided on before? And if it has, then of course you can place the trades and the stops with the correct position size. Stage 3 is obviously what happens after you enter the trade, ultimately ending up in an exit. So the process is quite simple. You review the current chart and ask yourself the following questions. First of all, is it time to exit due to either hitting a profit-taking target or a stop loss? Or is it time to exit because there's an imminent potential market-moving event such as major economic data? If neither of those is the case, perhaps you want to move your initial stop in the direction of the market, underneath or over your current price, depending on whether you're on long or short, to lock in some profit. So if none of these have been hit, then you return to reviewing the current chart and continue in a cycle until one of those exits is triggered. Finally, and importantly, is to review trade and make notes. What did you do well? What did you not do so well? Was there something you missed? Did you follow your system or not follow your system? So those are the 3 stages in a trading process. And your task is to develop a system which allows you to manage your trading activities in all of those 3 stages. Now, recognizing that this is new to many of you, we'll be covering all these aspects in detail in modules 2 and 3. So your actions from this unit is review the example trading process, and make preliminary decisions on those aspects you would include or exclude in your own system. As I said before, we'll develop this further with the learning throughout the course, so treat this as a dynamic document. But I want you to start right at the beginning. Consider this idea of the state to trade as part of your pre-trade process. So let me give you an example of that. So if there's a major life event going on in your world that deserves your attention, perhaps it isn't the right time to trade. So what I want you to do now is to make some notes on what may mean you're not in the best place for you to trade. So make it happen, follow through on those actions, and we'll see you in the next unit.